Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for Friday, January 12th, 2018. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. The ES continues to trend higher yesterday, basically making a run for it after breaking above 2760, running off, closing near 2770, getting a high of 2770 half on the day. A big time push late in the afternoon. Right now, currently seeing a smaller day on the session here, trading about half of average daily range, 10 points even so far of overnight range. And overall, we continue to see a clean trending market. The one-time price broke below the previous low. It was a failed new low that led to a two-day rally. And so far, we continue to see overall trending behavior, which continues to suggest that we should continue to look to defend pullbacks until proven otherwise. We have a great LVN that has made itself known here off of the 2735s. That's about where we held off of here. So if we were to rotate back into that LVN again, it's another opportunity to rally it to new highs. So continue to look to defend pullbacks here until proven otherwise. Today we have an impulse rally that has occurred in overnight trading on the intraday chart, and if we pull back to the midpoint, that could provide a nice key range for the day. If we take a look here at the NQ, it looks very similar. A nice rally also yesterday. We started much of the day in a range, eventually breaking above 66.95, sparked a nice rally into as high as 67.28s. Closed the day at around 23.5 and continue to see price push to new highs. So for the most part, we've seen higher highs and higher lows throughout most of these days since the beginning of the new year. We had one failed new low that took out a couple of day lows here, and then we've since rallied back up. So again, we're starting to see a couple of LVNs reveal themselves, one off of 66.20, one down here off of 65.70, and any rotation into those LVNs could still provide great opportunities for defense by bulls for continuations to new highs. We still have upside targets that could be reached into 6,800 and beyond. Taking a look at crude oil, we may have had a major rejection day yesterday play out. After a massive rally, we knew that after this tiny digestion day, there was a shot to see expansion. We saw significant expansion occur. We got to a high of 64.77, and as you recall here, we were looking for price to get as high as 64.74. That's this green line right here. That was the first major target from this low of the month. That target right there is 64.74. This one right here is 66.29. So that represents the primary target zone as defined by the PivotBoss ADR targets. And we got right into that level, and it actually provided resistance. Price attempted to consolidate at highs throughout the session and push further, but just wasn't able to, eventually taking VWAP offered and dropping back towards 63 halves. So pretty significant rejection and return that we saw after yesterday's range. Obviously, we still continue to see a major trending market here in crude, but if we have just reached a short-term top, then we could be looking at a little bit more pullback ahead. The key level here to watch today is going to be 63.70. Any push into 63.70 could be seen as a rotation, at least for short-term bears to defend above 63.70, and especially above yesterday's midpoint, which is 64.10. That would then begin to run stops for new highs yet again. So above 64.10 breaks this deal. Other than that, bears are going to look to defend rotations here at around 63.70 for returns back. So we could still see a bounce back up to those highs of the overnight session today, as we are rejecting the prior overnight low at this time. Taking a look here at gold futures, gold continues to be one to watch. It's not one that has provided any clean setup for me to kind of offer any great directional bias. This is what I tell my group in the trading room all the time. After you see a period of choppy behavior around value, once you get that major move that you're expecting, we got the first move down, we got a failure to go lower, so we got the return trip. Once you see that high probability move ensue, the move that comes afterwards, or the price behavior that comes afterwards, is the most dangerous in my opinion, because at that point the market is mostly digesting the recent price move. It's looking to kind of shake out the recent move a little bit. So what we're seeing here is just a little bit of back and forth, back and forth, back and forth action, and we could continue to see more of that. So fade new highs, fade new lows if you must engage the range, which means right now we're trading above this high. We finally got the 1330. That could lead to a come back to this level and flush out these recent lows, which could then lead to an opposite move. So it's really difficult to really engage gold at this moment after you see the high probability moves that we saw here before. So you have to be more disciplined and more cautious in this area until we see something that provides a high probability opportunity. Until then, we could see further chop. Once we do see significant rejection, we could return back to that 1280 half, but it could be a while longer of sideways action before that occurs. So be cautious if you're engaging gold. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Happy Friday.